Hello, I'm Sonia Kostner. I am a realtor um, in the state of Florida. Thank you. I'm a realtor in Florida, and today we are interviewing our friend Larissa Green, and I'll actually allow her to introduce herself. But this is a topic I'm really excited about. We're posting this because I feel everyone needs to know about self-directed IRAs, and I'm just grateful, Larissa, that you're taking the time to share your knowledge with us. So I'm Sonia Kostner. I'm a realtor in the state of Florida. I work with people who are um, moving to Florida. I'm a Florida transplant, so I often help other people move to Florida. And that's my interest. And I enjoy working with investors, but most importantly, I want people to know how they can build generational wealth through real estate because that's a millennial topic, generational wealth. And we talk about it, but people don't give us the building blocks on how to go about doing it. And Larissa is about to offer us a method by which people can shelter their money so that eventually they will have generational wealth to pass on. Okay. So I'd like the next person, Jonathan, you go ahead and introduce yourself, and then we'll leave the last introduction for Larissa. Okay.
Yeah, good morning. My name is Jonathan Sanders. I am a real estate agent here in Tulsa, Oklahoma. I'm also a economic development program director here in Tulsa. So I work with first-time home buyers looking to achieve that generational wealth, and I help provide them with first-time home buyer education, different resources in the form of down payment and other support. So I also am heavily involved in the entrepreneur market here in Tulsa. With this information, I just plan to help use this, guide a lot of my friends and colleagues that are also entrepreneurs, whether that be tech or just some startup that they may need help with being able to realize or leverage a self-directed IRA when planning for the future. Happy to be here.
Yeah. And before you make your introduction, because I'm so forgetful, Larissa, you will tell us about how investors can use a self-directed IRA to invest in, uh, as Jonathan was saying, entrepreneurial pursuits, correct?
Yes, I have slides to share. They are going to be focused on real estate, but we'll talk specifically about different investment or asset classes essentially, and then we can, of course, answer any questions on that as well.
Okay, so please introduce yourself, Ms. Green.
Okay, thank you so much, guys, for having me. My name is Larissa Green. I'm with Advanta IRA. Advanta is a self-directed retirement account firm. What that means is that we hold retirement accounts that hold private investments. That's sort of generalized, but essentially what it means is that our clients are finding investments outside of the stock market. They're bringing them to us and saying, how can we make this investment in a retirement account? And those asset classes can be real estate. That's the most common investment we see. And it goes up from there, real estate, private mortgages, gold and silver bars and coins, angel investing. We have people invest in private stock. And we'll talk about all of that in just a minute. But a little bit about me. I've been with the company for 11 years, a little over 11 years now. And I started out doing back office work, check coding, opening accounts, transactions for clients and things of that nature. And I've been doing presentations and business development for about 9 years now. So that's a little bit about what I do and kind of where I come from. I did work for a broker in what seems like another life at this point, doing contract to close and marketing for him. So I did a lot of that stuff as well. And that's sort of what brought me to Advanta as well. So I really enjoy my time. I really love doing presentations. I'm just happy to be here. So thanks, guys.
Okay. So, Larissa, what I'm going to do right now is pass the hosting over to you so that you can take over. Okay.
Great. Thank you.
Have we done it?
Got it.
Okay.
Perfect. So what I did was just put just a few slides together, but I always feel like when I'm doing a presentation, it's just very good to sort of see the stuff in front of you. It's just really sort of generalized information, like I said, about investing in real estate. That is the most common investment that we see, and there's real estate in so many forms. So we'll go over that a little bit as well, and then we can talk about the other asset classes that we can hold. The truth is, the IRS has always allowed private investments in an IRA. There's just not a lot of companies out there that are willing to hold those private investments. And so, Sonia, I know you mentioned, what other types of entrepreneurial investments are allowed. One of the biggest questions I get is, when was this started? When did people start allowing these types of investments? And actually, they've always been allowed. It's just that brokerage firms are unfamiliar with them, and so therefore sort of unwilling to hold private investments. They don't want to be involved in things like receiving rental income, for example, on behalf of a rental property in an IRA, or paying a mortgage, maybe even on behalf of a property in an IRA. And so there's some moving parts in there, and they just don't want to be involved. And so that's really where we come in. We're not competing with brokerage firms. We're just filling the gap because we have made it a business decision to handle things like real estate in an IRA.
Love it. I love it.
So just so that everybody is aware, we don't give tax, legal, or investment advice. And that's really important, because when you are making a self-directed investment, your investment is truly your own. And so we're not going to say this is a good or bad investment. We don't do any due diligence. So it's up to the account holder. And what I like to always say is that we hold the account, you find the investment, we help you get it done in the name of the IRA. And if we had to do due diligence and give investment advice, we just couldn't offer the same level of service that we do for private investments. We just don't get involved in that end of the business. So if you have questions about an investment you're looking at making, please ask it anyway. If I can't answer it, or you can reach out to me if you're seeing this recording later, I can always refer you to a professional that can assist you, but that's just not something we do in our business model.
Okay. You are simply an intermediary
Yes.
through which someone can set up this account.
That's right. And actually, I just talked to somebody the other day who I love the way he said it. He said, "You're my IRA assistant." And I thought, well, that's perfect. That's exactly what we are, as the IRA assistant. We hold the account and we help you make the investment, but the investment is your own. And that's really important. And the great news about something like that is that we can hold anything that the IRS allows. So if the IRS says you can make this investment, then we can hold it in the IRA. And I will talk about a little bit about the rules, because it is important to understand and know them, at least on the surface. And then, when you're looking at other different strategies for making investments, you can always ask those questions. Hey, is this allowed within the IRS rules? But understanding that there are going to be some things that you're going to be limited by is very important for a self-directed IRA.
Okay.
But like I said, we'll get to that in just a second. So on this slide here, we're really just talking about the different types of investments that IRAs can hold. And what the IRS has done, instead of saying this is what you can do, they've given us the very short list of things you can't do. And so I always like to give examples and sort of let people see that just about the sky is the limit for a self-directed IRA, which is really incredible, because you hear about all these really great deals. And, of course, because this is my business, my wheels are always turning. And I think, oh, you could do that in an IRA, or if you structured it in a certain way, you could make this investment through an IRA. So it's really interesting to see all the different investments that our clients are doing. I actually have a whole webinar on unique investments in an IRA. So you can see here some of the more common investments that we see. Real estate, of course, buy and hold, whether it's for short-term rentals or long-term rentals. We have people invest and lend money, so in the form of a private mortgage, so lending money to somebody, whether that's in a first position, second position, third position. We see private mortgages all the time. Private placements, so things like private stock, for example, or investing into what we call like a limited partnership, where there's a lot of passive or limited partners, and then you have general partners that are sort of controlling that money and putting it to work in a way that might be related to real estate. But Sonia, to answer one of your earlier questions, it may not be. People might be doing angel investing, where they're just a limited partner, and maybe the company is investing into medical equipment, or, hospital startups, or, all kinds of very interesting things can be done through private placement.
Yeah, the reason I asked about the angel investing is because um, I let me just be honest. My first thought will always be, how can this help my family? And so my daughter was saying, Mom, I want to start helping other young people um, start up businesses, start up their entrepreneurial businesses. And she says, I'd like to do these angel grants for them, or, do angel investing. And so I think that was one of the reasons that I got excited again about self-directed IRAs when you shared with me that people interested in doing angel investing can do it through a self-directed IRA. And when they get the return on that investment, that can also go into that self-directed IRA. And let me just say it once again, the best thing about an IRA is deferred taxes, and that gets me excited. So let me be quiet because you have a wealth of knowledge that I want the world to hear.
No, that's perfect, Sonia. That's absolutely true. I mean, when you make an investment through an IRA, and of course, two big benefits to investing through an IRA that's self-directed. One is just going to be putting your investments in what you know best. So as a real estate agent, for example, being able to invest in real estate, but also the tax status. So being able to make that investment and have those returns come back either tax deferred or tax free. And so if you're looking at an investment, you say there's going to be a really good return here, that might be something that you work through your IRA for. And the paperwork, and I have examples of that as well, but any of the paperwork for the investment is simply going to be titled in the name of the IRA. So you want to think of your IRA almost like your business partner. And so when your business partner is putting up the money, the investment is in the name of your business partner, which is your IRA. So it would be Advanta IRA for benefit of, and that's any investment you're making. So if you're buying real estate, everything from contract to close will be in the name of the IRA. If you're doing some angel investing, if there's a subscription agreement, for example, as part of this investment, then the IRA is going to be listed as the investor. And those are all very important parts of putting together a self-directed IRA, because that's going to demonstrate to the IRS that this has a tax deferred or tax-free status through a retirement account based on how the account is set up. So all very important, and all stuff that we help you with. Again, your IRA assistant. So we're kind of there to help you make sure that the IRA is properly shown as the investor.
We can do this with tax liens too, because I have several people who are now doing tax lien investing, and we could also put tax liens in a self-directed IRA as well, right?
Yes, absolutely. As a matter of fact, in our area, tax lien season is sort of May, the end of May. And so during that time, our office is very busy because we have a lot of people putting requests in and working with counties in order to purchase or bid on tax liens. So we do see that a lot. And you can invest in tax liens in any state. Just be aware when you're looking at tax liens, how each state may treat that tax lien. So some states are a tax lien state, like the state of Florida, where you invest in the lien, but when you foreclose, you don't necessarily get the property. It just goes to auction and you have the opportunity to bid on it, versus another state like Georgia, where it's a tax deed state. And if the taxes aren't paid, you could foreclose and get the property. So it depends and varies state to state. And we have clients investing nationwide in tax liens. So it's a very popular, if you will, investment through a self-directed IRA, especially because with a tax lien, you don't need a ton of money to make those investments. And so, when you have people looking at different investments, they say, well, I want to invest in something like real estate, but I don't have enough money to buy a property. What else is there out there for real estate? Well, of course, you can lend any amount of money, so you can do a private mortgage in any amount. But tax liens are another option to those individuals looking to get started in real estate. And it's something that we see pretty commonly at Advanta.
Yeah. And you just mentioned something that some of these things, I've been in real estate for a while before I found out. When I found out that an individual person could actually own mortgages and invest in mortgages and notes. That was another mind-blowing event for me. I'm just like, what? That's another way to make money. And so you just said, I'm just repeating what you've said, that you can actually invest in mortgages, not just the real estate, but the mortgage itself, through a self-directed IRA.
Yes, and the great thing about private lending in an IRA is you are truly determining the rate at which your IRA is going to grow. So if you say, well, I'm willing to lend this money at 8% or 10% or 12%, I charge points or I don't charge points, or I'm willing to lend it for a year or 30 years, whatever it is, because all of that is determined by the account holder, you are truly determining the rate at which your IRA is going to grow. So if I lend money at 10%, then I know my return is at 10%. And something to keep in mind when you're making those types of investments is just remember that you do have to do your own due diligence. So you want to do due diligence on the property, on the borrower, all of the components of any investment that you're making. And we actually
That's
do.
not your responsibility because you're the intermediary. That is the person doing the self-directed account. That's their responsibility to do the due diligence on any investment that they put into this IRA, correct?
That's correct. Yep, that's correct. What we do is review the document to make sure the IRA is properly listed, but that's it, sort of the extent of our service. So our clients, that are sort of new to investing, I always recommend working with an attorney. We don't require it, but it's always something that we recommend. And an attorney can definitely tell you, okay, this is going to do to look into the borrower, we're going to look into the property, whatever else that they may require. And also things like what information goes into the note, what information is listed on the mortgage, things of that nature. So, the account holder wants to make sure that they have a good understanding of that. Now, we do have webinars on things like private lending, but we're really focused on how the IRA can do that and not really the legal side of it. So that's
Right.
something people can always check out.
Right.
I have
Yes.
a question. So you said that we are able to acquire assets via the self-directed IRA in the name of the self-directed IRA.
Mm-hmm.
So can you tell me what are the differences between the self-directed IRA and perhaps LLC? And what would be the advantages to either or?
Mm-hmm. So the self-directed IRA is really just as it sounds. It's an IRA account. I always tell people that self-direction actually describes the asset and not the account itself. So if you have a traditional IRA, for example, the traditional IRA is a tax deferred account, which means when you make contributions to that account, you'll likely get a deduction on your taxes for making that contribution. And then that money is going to grow tax deferred. When you reach retirement and you take a distribution of any amount of money, it's going to show up as ordinary income for you to pay taxes on the year you take money out. A Roth IRA is considered a tax-free account because you put money in after you pay taxes, essentially. And then as long as you reach age 59 and a half and it's been in existence for 5 years, any earnings in that account would be tax-free. So meaning that those accounts are specific to their tax status based on the type of account that they are. Now, when we look at the investment itself, it's just going to be basically the nature of that investment, tax deferred or tax free, is going to depend on the type of account that it's in or that you already hold. When you make those investments, the benefit through making them through the self-directed IRA just depends on the type of account and what benefits you're looking for. So the tax deferred accounts, like a traditional, a SEP, a simple, solo 401k with the traditional component or side of it, those have the deduction benefits, the deferral benefits. So all of that growth is just going to be deferred. There's no taxes paid. You're kind of kicking it down the road so that you can continue to make investments and grow that account without paying taxes. Your Roth account or the Roth component of your solo 401k is great because it's tax-free, but there's no deduction. So those accounts have their own benefits for different reasons. When you look at something like an LLC, that's not something, that we really deal with as far as the benefits of an LLC. However, you may want some anonymity when you're making investments. There may be some legal reason that you use an LLC. However, you can use an LLC when you're making investments through an IRA account. So if you prefer to use an LLC for whatever reason, the LLC can be owned by the IRA and then in turn buy real estate or make investments that you choose. So you do have the opportunity to incorporate using an LLC if that's part of your strategy. Does that make sense?
Yes. So a few questions. So if the IRA were to be, so a lot of times you might have alluded to this, but a lot of times people use an LLC is strictly for liability, mitigating risk. So if the IRA was on the LLC, can it easily be traced back to you? Can you have an IRA that's kind of anonymous where you don't have to use your name? Like how would you, if I were to utilize this, how would I be able to mitigate, personal liability?
So your personal, the status of your IRA and your personal liability are going to vary state by state. So that's one important note. So, for example, in the state of Florida, there is protection for your IRA from personal liability, but that is going to vary state to state. So it depends on where you reside. But
Are you in Florida?
yes, I'm in Florida. Yep.
Okay.
So, so that, and probably why I know the Florida
so well.
but so you do want to check with your state to find out what sort of protection your IRA would have in that state. But then to go further into that, yes, you can leave your name off of any information when you're making investments. So that's what I do. I do self-direct on my account and I leave my name off. I just use my account number. And Advanta isn't going to disclose any information to anybody that calls. That's just not what we do. Of course, there's a lot of anonymity involved in our business. And so even sometimes I have people who call and say, hey, I see Advanta on this deed and I'd really like to buy this property. Can you give me the owner's name? And we would say, no, you can't have any owner information. But if you give me your information, I would pass it along to them with no guarantee that they will reach back out to you. So, that's just a part of our business. So when you're making an investment, if you want to leave your name off, you certainly can do that. If you wanted to use an LLC for an extra layer of protection, if that's sort of, what your attorney would advise, then that LLC would just be shown as the IRA is shown as the member of the LLC. And now you can make investments through the LLC. So you can layer the structure of the investment any way that you want that you typically would do. So if outside of an IRA, you like to use a trust, an LLC, you don't like to put your names on those documents, you can use the IRA account number instead. You can use all or none of those entities. It's completely up to you.
Okay, gotcha. And so let me get this correct. So when the question I asked you before was kind of comparison between the LLC and the self-directed IRA. So one of the things that you kind of stated was it's more so like it's for tax benefits. There's a lot of tax benefits towards using a self-directed IRA. And so the conversation I have with my mom a lot is like, as an entrepreneur, how do you balance showing income when it's time to like purchase a home versus like taxes, right? So if you could speak to that a little bit, like, and I'm not expecting you to have all the answers, but that's something that I'm working through is like, how can I get myself in the best position for taxes? Because like, I'm not looking forward to paying taxes next year or anytime. And it's like, you get penalized for doing well in America. And so in that situation, is there like loopholes? Like how, like, can a self-directed IRA help you kind of show income while still being a tax shelter?
So I don't have all the answers. I'm not a CPA, but I'll give you sort of the overview. The benefit of the IRA could be tax deductions, and that could be the same for like a solo 401k or a SEP IRA. Those accounts allow a much larger contribution on an annual basis. And so when you want to tax shelter something and then have it grow deferred, looking at some account that allows you to put more in on an annual basis may be a huge benefit to you. So let's say that your CPA says to you, hey, you had a lot in earnings, we need to look for deductions, then you could turn and look at something like a SEP IRA or a solo 401k where the contribution limits are up to 61,000 this year. And they're going to change in 2023 and go up a little bit. So
You said the max is 61,000.
61,000, it is based on a formula of your total income. But that is sort of, you know, a way that they kind of give you some tax benefits on the front end. So meaning that today you can get a tax benefit from an IRA by making a contribution and getting a deduction. And that's something I would recommend talking to your CPA about. On the other side of that, the benefit is that those investments that you make are going to grow tax deferred or tax free, depending on the status of the account. So when you have earnings on those accounts, regardless of how the earnings, what the earnings are from, whether it's a mortgage interest payment or rental income, they're going to go back tax deferred or tax free, with some exceptions. There are some exceptions to that. The downside, I guess you could say, of a self-directed IRA would just very simply be that you don't get deductions and depreciations for real estate like you would if you made those investments personally. So that's just something to keep in mind.
Say that last part again, that last sentence.
Yeah. So you don't get to take deductions and depreciation personally for real estate investments made in the IRA. It just doesn't work that way. So being aware of that, you know, sometimes people will say to me, well, why would I make a real estate investment in my 401k or in my IRA if I don't get deductions and depreciation? And then we kind of go back to that benefit of being able to invest in what you know best, or maybe looking for the investment that makes sense for your self-directed IRA if real estate doesn't. So if you don't want to own real estate in the IRA because you don't get deductions and depreciation, but you can lend money in the IRA and have that money grow tax deferred or tax free, then that may be a benefit to you. So kind of all of those things are something to consider for sure.
Go ahead, Mom.
Excuse me. Can we take a 5-minute pause and then come right back? Is that possible?
Yeah.
Okay. I'm going to go ahead. We'll be right back.